What's happening, Mad Gang? So now you guys already know, you sort of have an idea how to manage risk, so you're no goofballs anymore. Today I'm going to teach you how to have a better risk to reward ratio, or at least show you how I get a better risk to reward ratio. Because folks, I know risk management is boring, but that's literally like the pudding of trading. Yes, you'll make wins and you guys want a strategy and you guys want to make money, but it's not about how you make money, it's about how you keep money. And that's about what I'm going to try to show you today. So if you don't know what risk to reward ratio is, go and do a basic course and really just get educated on that. But basically, risk to reward ratio, we work with, it's called RR. So it's always going to be a 1 to something. So if I have a risk to reward ratio of 1 to 5, it means I'm risking $1 to make $5. Now, one thing that a lot of people do not make accommodation for in situations like this, when they calculate their RR, they do not have room for their spread or the commission that's calculated in. A lot of people think that the risk reward ratio starts at exactly the entry price. So remember, that's not the case. You need to make accommodation for the spread and also the commission cost, and maybe also if you're a swing trader, you have to take into account the swap fees. But for the purpose of today's video, I'm just going to talk about our entry, stop loss, and exit, okay? But you have to take these things into consideration. Please do not forget about them. You guys are going to say what you want anyway, so I'm just going to do my thing. Hopefully you guys pay attention. So into the charts today. Now, a lot of people, this is where my thought process started with having a better risk to reward ratio, okay? It started with, I saw that a lot of people struggled with getting out of their entries too early. They were exiting with their profits too early. And I thought to myself, okay, why is that? I could not find the conclusion as to why that is, but I found a way to circumvent that in a way. Now, it's the obvious thing, man, and nobody really wants to do it. But why do we exit our profits soon, but we do not exit our losses soon? So I have 3 tricks up my sleeve with regards to having a better risk to reward ratio. I'm going to teach you one with a little bit of a tease of the second one today. Now, the first thing that you want to do is simple. Have a closer stop loss. But you cannot have a closer stop loss based on structure if you get stopped out the whole time. That's going to influence your win rate. So what you need to do is I'm going to force you to work on your patience, and I'm going to force you to get better entries, and I'm going to force you to have a better stop loss with this simple approach. So everyone, well, a lot of traders try and focus on getting their stop loss above the high or above the low. I mean, no one's to blame here. That's what we are being taught in this industry. Bullshit. I don't agree with that at all. I agree with, yeah, it should be above the high or above the low with context. Now, just bear with me. Now, let's look at this sell opportunity right here. Yes, I'm cherry picking trades, but the figure stays the same. The methodology stays the same. So if we took a sell right here, your stop is going to be above the previous high. Take profit, let's just say take profit right there. I know I'm cherry picking trades, guys, but just bear with me and understand that the basic stays the same. You cannot drive a car if you do not know how to understand the basics. So before you guys are going to go ahead and drive, I need to teach you guys the small things, and remember to renew your mind daily. Place repetition on this because it's going to become second nature. And without this, my 3 risk management, better RR approaches, I would not be a profitable trader today. So if you guys want a holy grail, the previous 3 bootcamp videos, I pretty much gave it to you on a silver platter. It's up to you to decide right now. Are you going to follow it? Or are you going to be a goofball and sit and watch TikToks for the rest of your life? No offense. The offense is taken, it's not given, fam. So the number one thing I need you guys to focus on is a candle flip. So I need you guys to stop focusing on entering at a candle closure. Why, MC? Because the candle closure is good, but the candle closure alone is just the setup. That's just the indication. You now need your entry, folks. So stop making the mistake and thinking a setup or an indication is your entry. That's wrong, in my opinion anyways. So if I saw this big bearish engulfing candle and I wanted to enter off from it, that's fine, but just wait. Wait for the candle to push back up and then break that low with 10 points. Why 10 points, MC? Because we have brokers like Ohanda, FXCM, EuroFX, HFM. We have all of these brokers. They have different prices, folks. So we need to accommodate for that. We need to have some space for that. So my rule of thumb is 10 points. And when I refer to 10 points, it's on currencies is going to be 1. You need to look at the number here on the right. So entry would have been right there. Okay. Is this a delayed entry? MC, I don't want to get into it too late. Bro, you already are late to the party. So rather just enjoy the party while you're there and make the best out of it. Stop saying you guys are late and the market's eating up your profits and yada, yada, yada. You're just sounding like a goofball, my man. Just stop it, bro. Just enter the market, make your money, and get out. The idea here is not to let your ego get in the way. We're past that. You guys don't have an ego anymore. Now we need to place repetition on the basic principles of just making money, put food on the table for your family, and get out. No discussion after that. So we have our entry right here. Now where's my stop loss? Your stop loss is going to move from the high right here to the high on the candle flip. Why the candle flip? Because that's the whole point of the candle flip. We want the market to push up, show us that there's a lot of volume to the downside, there's no volume to the upside, so we want to get in with that volume. Okay, yeah, MC, but what if I get stopped out and the market comes back down? Bro, tough shit, man, that happens. It's part of the market. You want something that's consistent, that produces consistent results. You don't want to depict your trade, well, how good you are as a trader with just one trade. You don't want to do that. You want to be judged by you judging yourself, because we don't care about outside noise. You want to judge yourself based on consistent results. And if you get a W loss, like I explained yesterday, you're well on your way to becoming a profitable trader. So in this series, by following these rules, you have no doubt in my mind you'll become a profitable trader. So that's rule number 1. Wait for that candle flip, okay? Rule number 2. Let's say you don't want to wait for the candle flip. Implement the 50% rule. MC, why do I have to implement the 50% rule? The 50% rule is closing 50% of 50% of your stop loss. Why is that? Because, bro, 90% of traders fail. What does 90% of traders do? What do? They close out their profit too soon. Family, I cannot put enough emphasis on this. This has saved me since day one. Please believe me. So we already distinguished that the idea here is to get in on volume. That's the number 1 goal. You want to get in on volume. If you don't do that, go and bake some cookies, okay? But we want to get in on volume. That's the number 1 thing that we want. So stop loss, 50% at the 50% region of my trade. I do not close full. I always give my trade room to breathe. But can you see now, the idea here is, instead of you taking a 2.2 risk to reward ratio, let's just say I'm risking $4,000 right here. Okay? My risk to reward ratio is 2.2. So let's just even it up and say that I'm going to make $8,000. Okay? Now let's just say you close 50% at that 50% rule. So you then lose. You're prepared to call it quits at $2,000 right here. So the remaining area of that stop loss is going to then be 50% of that 50%. So let's just call it $1,000. So you're actually risking $3,000. So you're manipulating the system, thinking, okay, because the first thing that you need to do, folks, is calculate your lot size when you enter. But then you have to calculate your stop loss as well. So I'm letting you think I'm risking 4,000 to make 8,000. But in natural fact, I risked 3,000 to make 8,000. Isn't that amazing? So who cares about the numbers on the screen when it shows your RR? This is just a tool, guys. You need to think beyond that. You're literally just risking 3,000 to make 8,000, and that's just a simple scenario. You can risk 1,000 to make 8,000. It all depends on the risk to reward ratio. Let me show you. Okay, so this is GBP USD. For the people that are in the academy, you guys know that this was a valid trade, not cherry picking trades, but this was a trade taken on the 13th of August, just last week. Stop loss was around about here. Take profit was when we came back and we rejected that exhaustion area. Go and watch the previous bootcamp videos. You guys will know that this is my exact exit strategy. So, as you can see, the stop loss is already very small. But let's say you did not implement that rule and your stop loss was there and you implemented the 50% rule. There's a way of combining these two together and you have to tweak it a little bit, but we're not going to get into there today. So 50% stop loss right over there. Same methodology. Let's say I wanted to risk 4,000. But right here, I risked 2,000. I got out at 2,000 if it hit that level, which it never did because we want to jump in on the volume. So in natural fact, I'm risking 3,000. Okay? My risk to reward ratio is 7.6. So that is, where's my pen? 28. On the 4,000, that's 28 on the 4,000. Okay, your lot size does not change, so it's going to remain 28 on the 4,000 that you risk. So in actual fact, you did not risk 4,000 to make 28,000, you risked 3,000 to make 28,000, just like that. And let's just say it comes back down and it stops you out at the 2,000, but it reverses back up. You then made, what's 28,000 divided by 2? It's 14,000. Now remember, this is just lump sum numbers. You need to take in consideration the commission and the spread and all of those things, but this is the idea. You risked $2,000 to make $14,000, or you risked $3,000 to risk $28,000. At the end of the day, fam, if you combine this and the risk management tools together, or let's just say you refuse to use this 50% rule, your risk to reward ratio just turned into, if you waited for that candle flip, this candle right here was our setup candle. We entered on the flip, so stops below them, 10 points below that. Risk to reward ratio is 1 to 22. Now this is what dreams are made of. If you go on social media right now, people talk about a 1 to 22 risk to reward ratio. Let them laugh, man, because you can consistently make trades like this if you just wait and wait and wait and then get the right one. That means you can lose 22 times in a row, depends on your risk, and still be up for the month. Folks, I do understand that risk management is a boring topic, but it's boring to everyone, and still it does not blow my mind why 90% of traders fail. So make it fun, gamify your trading system, gamify your exit strategy, and the losses will take care of themselves and the W's will take care of themselves. You need to form it into a system. Hope you guys enjoyed it. There's a massive announcement dropping soon. I'm just going to drop it right now, but the announcement with the details thereof, this bad boy is going to go soon. Let me know in the comment section what you guys think, but I think it's time we remove this bad boy.